Welcome to the High Rise Podcast, presented by Headset, the leading data and analytics company for the cannabis industry.
Welcome back to the High Rise, a laid-back, data-back conversation on all things cannabis, where we talk about U.S. MSOs, Canadian LPs, products, and market analysis through the lens of data. I am joined today, as always, by Emily Paxia of Poseidon.
Hey, everybody. Welcome to the High Rise.
And today we have a very special guest. We've got Brady Cobb, cannabis entrepreneur, advocate, former CEO and founder of Bluma Wellness out in Florida.
How's everybody doing? Thanks for having me on, guys. I appreciate it.
Yeah, really, thanks for joining, Brady. I think today is a great recording day. We've got a ton to cover, particularly the MSO earnings. Q2 earnings season happened just as of this morning. I mean, we just got Cresco in as well, so lots to cover there. And I think we'll start with that and then maybe go into a bit of news here. So looking at the earnings, we're going to cover Curaleaf, Ascend, Verano, Green Thumb, Columbia Care, Trulieve. These guys all hit, and of course Cresco. But let's start with Cresco, since that's the latest and greatest here on a Friday morning. They hit $210 million in Q2 revenue. I think it was a sequential growth of about 18%. Any highlights here?
I mean, for me, one of the things that's always attracted me to the Cresco story, when I first got to know them, even before I got to know them, when I was just following them in the space, is they were the first real company to go out and focus on wholesale. And if you truly believe that, the CPG play in cannabis long-term is going to be a wholesale play, they are without question the most well-positioned company to address wholesale in both the short term and the long term. If you look at how they built their C-suite, and then you look at how they're executing, I mean, I think north of 50% of that revenue in Q2 came from wholesale business, which is very impressive. But you also can't sleep on them as a retailer. They did $101 million out of 33 stores in a quarter. That's a big number. And what I really also think is Cresco, as compared to the peers, always kind of was a little bit behind in the top line revenue. They were right there with their peers this time, which I think is impressive. So they definitely cleaned up the margins after they switched to GAAP, which I think is everyone's got to do that GAAP switch at some point. You got to deal with the pain. They dealt with it in Q1. You look at the margins this time, significantly better. So for me, it was a great quarter. I'm really excited to see what the back half of the year has for them. And Charlie and his team are continue to execute at a high level. And I just, if you're marking it down, pay attention to their wholesale business as this industry matures, and as you look at the traditional CPG players in the U.S. internationally wanting to enter the U.S. cannabis space. Shelf space and the ability to distribute is going to become very important, and they're way ahead of the game in that regard.
Yeah, you bring up a really good point. When I think about MSOs, you think a lot about retail, but wholesale is a big part of the narrative, and it depends on the MSO we're talking about, and some are better positioned than others, I think, on the wholesale side. So that's an interesting comment there on Cresco, that they're so strongly positioned for that, because it is interesting when you see some of these organizations kind of call out both sides, whether it's wholesale and retail or maybe consumer packaged goods and retail. That's a good take on how they're positioned for that and kind of the future of the industry. Let's dive into Ascend. Emily, I know you're close to Ascend. I think that's a good one to touch on. Ascend had Q2 revenues of just over $83 million, sequential revenue growth of 26%, but year-over-year growth of 236%. Any commentary on Ascend?
Yeah, I mean, full disclosure, I'm on the board, so obviously pretty big fan of the company, but I think Ascend's whole mission, and this is something we talk about a lot on the show, is how the different MSOs are starting to have a defined strategy. And just as Brady was talking about the fact that Cresco really has leaned in early and aggressively on the wholesale aspect of the business, Ascend has really tried to focus in on a mantra of go deep, not wide. And so they really have focused in on states like Massachusetts, Illinois, New Jersey, New York, and now they're getting into Ohio, and they've been turning on their assets. So this quarter, they did see some growth because they turned on multiple of their assets, including their big flagship store in downtown Boston. I mean, I think that store isn't yet showing its potential just because it's been an odd time with the transition I mean, we're kind of re-entering into a really heavy time of COVID, but it's going to be an interesting time to see when people come back to the offices and when people come back to see things at Madison or at the Boston Garden. And so, the pandemic does have an effect on stores that are in those types of downtown locations adjacent to entertainment and offices. But I still think there's a lot of potential coming out of that door. They also did increase their guidance on the top line from 300 to 350 million for the year. So I feel like they're feeling pretty bullish on it. They did note some things around margin compression and a little bit of shifting down on basket size, but I think that's just because they're starting to settle into what's going on in the market. And they did also share that they had to write down some product because of some tainted genetics that interfered with the grow. And I think this is one of the things, like Ascend tries to be really transparent about a lot of the details of what's going on in the independent operations, not just talk about it on the wholesale level or the big picture level. I think the analysts appreciate that because they are really trying to dive in a little bit on the nitty gritty of the business. And Brady can share more about this, but one of the things I think is the hardest part in these MSOs is being these vertically integrated business with so many different layers to the business is cultivation is a place where they are very exposed to having loss because it is such a difficult aspect of the business. Growing cannabis has never been easy, and growing cannabis on scale is even harder. So
you're spot on. What you're going to see, I think, with a lot of these MSOs, and it was brought up on several of the conference calls, is margin compression. And a lot of that margin compression and price compression, and I see it every day in Florida, which Florida is really one of the only true vertical markets without wholesale, where you have to be proficient on all stages of the game. Otherwise, you're going to face margin compression because you're going to have to price things to move them instead of just throwing them away. A lot of, in True Leaf's call, it was a big topic. In Curaleaf's call, it was a relatively big topic. Cresco, not really yet because they're only at 8 stores and growing, but I'm sure you're going to hear there are no shortcuts in growing cannabis. And I appreciate what Graham from Glass House always talks about. You cut a corner, you're going to pay for it on the back end. So where you're going to see a lot of this happen is doing cannabis on scale is one thing. Trying to introduce elements of premium on scale and having a product that people wish to pay for is a whole different notion. And that's what we endeavored to do at One Plant. And what we did is grow premium on scale and kind of own that premium sector of the market where you can dominate your margins. But I think what you're going to see is the companies that can figure that out, Ascend with what they're building and the states that they're in, from what I can see, seems to be working towards that. And they maintain a good position in the markets they're in. But it's doing it at a big scale, I think, is where you're going to see some MSOs start to separate from the other MSOs, because it's not easy, but you can continue to command a margin and a price point that people want. Think about this. In Florida, Curaleaf, Trulieve, Cetera, all are priced sub $45 on average. AYR is in there too. All sub $45 an average price for an eighth of flower. Flower is north of 50% of the market. The black market price is $50. So here are these companies with license to print money in a federally illegal business selling product substantially lower than what the street value is. And there's only 600,000 patients in Florida, and you're looking at a total population of 21 million. So the black market deals in parking lots are getting 50, and the in-store dispensary deals are getting an average between 40 and $45. So in that, that just shows you the product quality in the black market is still superior to what is in the legal market for the lion's share of the business. So whoever can address that market, as we were building out One Plant, our target always was grow good enough weed where people want to get their card and go see a doctor. I never saw ourselves as competing with Trulieve or Curaleaf or anybody else. I saw ourselves as competing with the guys moving stuff out of their trunks. And if you can start to get people to want to go into a store, you win. So it's an interesting point, Emily, because I think you're going to see the ones that don't invest in cultivation and processing and genetics in the short term being 24 months to 36 months, are going to start to feel the pain on margins, because it's going to become more of a consumer packaged good where you get a traditional 25 to 30% margin instead of cannabis where you should be getting 60 to 70, in my opinion.
Yeah, it's interesting. Yeah, because a lot of the ones with the wider operation base, I saw they're reporting more 50% plus. I definitely saw Kim is reporting in the 60 plus. And I think you're absolutely right, especially when you've got that level of depth in one market where you can really leverage the entire supply chain. But it is interesting. One of the things that struck me, Sai, was looking at your data from the Western states. And I definitely heard this out of the mouths of, Abner Curtin, the CEO of Ascend. I heard it from Ben Kovler. They still are very focused on the markets east of the Mississippi. And I think it's because of, obviously they do, what do I always say? That they're selling ice in the desert. And they do acknowledge that to an extent in some of the markets, not every market, because some of them are getting more competitive, like Florida, for example. But the basket sizes that we were seeing, it's like drifting down to $101 per basket, which I think when your data was showing that like Nevada, Colorado, Oregon, and California is more like $49 a basket.
That's right.
Size.
Yeah. Much smaller.
So it is really interesting when you think about the torque of every transaction that goes on in these stores on the East Coast. And I do think the products are a little bit more expensive in some of these, or I know they are. So anyway, just interesting on basket size.
Yeah, and Ascend did talk quite a bit about their retail footprint, and retail revenue was about 70% of the business in Q2. I did see that note you mentioned where the value per transaction and basket size is getting a bit smaller, declined by a little bit over 8% there. But total transactions increased, which is interesting, and kind of doing some back of the napkin math. With 18 stores open and operating, on average, these stores are doing about $1 million per month in sales, which is, pretty notable, especially when you look at some of these other markets out there that, like you were talking about in Nevada and California. $1 million a month stores are more rare, I would think. And then, their footprint is quite a bit smaller at Ascend, Massachusetts, New Jersey, Michigan. So, that's, did I catch all that? Illinois?
Illinois, new things coming in Ohio.
New things in Ohio, yeah.
New York, obviously, 2023 for adults. Yeah.
Yeah, so like the 2021 numbers, like for Massachusetts, about a $1.5 billion market. Michigan, about $1.5 billion market. New Jersey, a bit smaller, $250 million market. Their total addressable market for what they have, a bit smaller. Well, I don't have Illinois in there, but what is Illinois? Illinois is about $1.5 billion as well, where some of these other MSOs have a lot more exposure. So that's interesting. You're saying kind of going deep, versus wide is some of their strategy. So a little different than some of the others. But speaking of others, let's dive into Curaleaf. So Curaleaf, let's see how they did.
Big and wide.
What was that?
Big and wide.
Select vape carts for everyone.
Just here we go.
I saw something in their Q2 note about a deal with Rolling Stone and select vape carts. So maybe Brady, you're absolutely right. Everybody, including Rolling Stone.
You get a vape cart, you get a vape cart, and you get a vape cart. That's
right. And now select gummies and select everything. $312 million in revenue, sequential quarter-over-quarter growth of 20%, year-over-year growth 166%. Yeah, that's a great comment, Emily. Speaking of, why they kind of do a little bit of everything. They talked about their European acquisition. They talked about some stuff in Colorado. Any highlights? Brady, I know you were taking a look at this.
Yeah, for me, the top line number is obviously massive. It's a big number, and it's by going wide. I don't necessarily know, based on the management commentary, that the management or the company kind of understands who they want to be versus who they don't want to be. I think they're truly trying to be everything to everybody in this space. And at some point in time, you got to pick a line. And at some point in time, you kind of got to know who you want your target consumer to be. The market that's closest to me, which I regard as kind of the real testing ground for MSOs, is Florida, because it is truly vertically integrated. You don't have any brand competition in your own stores. So I'm not talking about Florida just because I live there, but it's truly one of the only markets where you have to do every phase of the business. But you can also curate and do real data testing on your brands. And Curaleaf, they've had a consistent eighth price of $35. Now they've grown their share rather substantially. They started the year, I want to say sub 10%. They got to be close to 15%. So they're eating into Truliev's share. Trulieve dropped almost 8 points in Florida as far as market share over the last 2 quarters, which is a pretty big drop. And a lot of that's being soaked up by Curaleaf, but they're spending money to get there. They're selling Ace at $30. You look at the margin, it explains the margin. They're moving a ton of product. They're playing the game, the seesaw game, increased top line revenue at the expense of margin. I think their margin was like 49%. So again, we're selling a federally illegal substance. That's a ticket to basically get in the game pre-legalization, and you're running a margin that's 49%. That to me is something that they need to address over the next couple of quarters and start beginning to price and cultivate products that they can sell to achieve a higher margin. But they kind of did the game of, do you want to post top line revenue or do you want to focus on your margin and your profitability? And they went top line revenue. You look at net income, put Curaleaf's net income next to GTI's or True Leaf's. It's not pretty. So again, that's making a conscious decision. We're going to go top line revenue. We're not going to really care about margins yet, or generating or going after being a profitable business just yet and generating net, good net income. So when you're in this business, you have to make that decision kind of early on. What do you want to be? Do you care about posting profitability? Do you care about an EBITDA, or do you care about top line? This one shows me they had a quarter based on top line. The challenge for them is going to be transitioning to making some of that come to the bottom line, get a margin at least in this with a 6 in front of it, if not a high 5, somewhere high 50s, low 60s, and let's get some net income. But other than that, I mean, it's a freaking massive top line number.
What do you think about the tax situation there?
I mean, it's tough.
Yeah.
Again, it's and if everyone thought 280E was going to get fixed, it's not coming anytime soon. And I still think it's yet to be seen what kind of drag the whole European acquisition is going to be on the U.S. side of things. Because if everyone thinks the U.S. is moving slow, I did a lot of early work in Europe, in both Italy, Northern Ireland, and the U.K. back in my Sol Global days, and they are crawling along at a snail's pace. At some point, that European acquisition, if you're looking at it through the lens of like 2030, I think Boris is going to look incredibly smart. If you're looking at it through the lens of anywhere between now and 2030, it's probably going to be a pain point that's going to keep dragging it down.
I happen to agree with you. I mean, EMAC is they're strong, but it's just so small, so early, so fragmented, so slow. And I feel like Curaleaf is just like running out the gate since they got going in the U.S. And so it's a little bit of a pace mismatch, but I'm curious to see how that plays out too.
Yeah, they definitely have that scale over there. It's about 15 markets that their retail stores are located in. So that is pretty wide when we compare to someone like Ascend, like we were talking earlier. And another kind of notable thing in their earnings commentary was they mentioned that they brought online 250,000 square feet of flower canopy during the first half of the year, with 40,000 planned for the second half of this year. And that was interesting. They didn't call out what markets that canopy was in. Could be spread across everywhere, could be spread where areas where they're more focused on wholesale, like New Jersey. But it does kind of remind me of some of the headlines that you'd get from some of the Canadian LPs, in the early days, right? It was all about canopy and how much can you produce and how big can you get. And so it does kind of indicate, what you're saying, Brady. It's trying to get that at scale, maybe not worried about that profitability question quite yet.
Well, the canopy size thing, that's a really good point, Cy. And it brings me back to the days of when we were getting the canopy press releases and the Chronos press releases and the T-God and everybody, Afria, and they were all running hard against each other. It doesn't really matter if it's all crap. And if there's a couple of those companies that all failed in Canada have taught us anything, if you grow a couple million square feet of weed that I wouldn't have smoked in high school, you're not going to be able to sell it. It's just not going to sell. So I don't really care how big your canopy is. Congratulations, you got 1 million square feet of mids that you're going to send to distillation, and you're going to incur and increase your cost of goods sold, drive down your margin, and you're eventually not going to be able to sell it. So it's like, congrats. Every time I hear someone talk to me, and I get a lot of pitches about canopy size, it's like I go back to PTSD from Canadian days in the early days. So it's like, it's a very good point. If I was giving free advice to the Curaleaf IR team, it would be to focus on what is your yield, what are you growing, what is the net selling price per gram that you're achieving. Those types of things are far more important to me than, okay, you've got 500,000 square feet in one state. Congrats. What are you producing out of there? Because in Florida, they're building 250,000 square feet, but they're selling it at $30 an eighth.
Wow. Yeah. Well, we'll see how that strategy plays out over time, and yeah.
Select cards for all.
Exactly. They've got a very focused CPG strategy with Select, I would say.
Hey, by the way, it's a good product. I mean, for a mainstream distillate vaporizer cartridge, and even in some cases a concentrated vaporized cartridge, whether it's resin or rosin, they're consistently very good. I mean, that was a good acquisition in the sense that it's a good product, run over run. It's a lot of blue dream for everybody, but it's run over run. It's pretty, I give them credit. It's consistent. That's hard to do.
Blue dream for everybody. What was that strain you shared with us at that secret gathering that was so awesome?
I think we had some runts, and then my personal favorite that we ever grew, the Capulator, the breeder, gave us his cut of Mac One,
Mac
Mac
which
one.
one, yeah.
Mac One's
That-
just poof, it's the best. It never disappoints, and that cut's really special.
Yeah, I feel like that had me at hello, and I haven't stopped thinking about it. So
There'll be
at some
plenty
point,
coming to Ojai
Haunt
and
you
Vegas.
dreams.
Don't worry.
okay, good. I'm gonna place my order today.
All good.
All
I
right.
got you.
All right, well, let's chat a bit about Green Thumb GTI. So GTI revenue number is 221, almost 222 million in the quarter. Revenue growth of 14% sequentially, 85% year over year. Speaking of margins, their margins, gross margin, high 50s, well 55.4. Any commentary on GTI, Emily? I know you were looking at this earlier.
Yeah, we've been long and loyal investors in GTI since before the word MS or the phrase MSO existed. So definitely impressed by the way that it's actually really, again, just another difference is the way these guys really have focused in on cost of capital, preserving shareholder value, really focusing on, EBITDA and free cash flow. And they're just really thinking about how to run this business as efficiently as possible. And I remain impressed by that focus. And, there were a couple of mantras I noticed on the call. They were talking about the tidal wave of growth and also this is day one. And I think their point is like, this is, they had another quarter over quarter, year over year growth, and they're just really establishing efficiency in their assets at this point, and yet they're continuing to explore ways to expand. So, they talked about their expansion into Virginia. They talked about their acquisition in Rhode Island and, just seeing the continued tidal wave, as they say, of consumer demand. And, they do have that partnership with Cann, they're bringing kind of a new lower dose product to the market. And so they're talking about how they're going to be addressing new market segments that are trying to get a stronger foothold into the industry. Whereas in the past, it had been a lot about the higher potency product. So, overall, I would say it was a great quarter and it just continues to show they're bolstering their balance sheet. They're getting ready to lean in on some CapEx in the back half of the year. There were some questions from the analysts about, going forward, some margin compression and what they think will be happening. I didn't hear they're anticipating a lot of that, but, they are trying to stay above the 50% on net margin. Yeah, just overall, I heard a lot of strong things coming out of both Ben Kovler and the CFO, Anthony Georgiadis, who's been a prudent shepherd of capital over there this whole time. So
Yeah, they called out some things. Revenue growth was primarily driven by increased scale in consumer packaged goods and retail businesses. So the CPG side, I know they have brands like Rhythm, and I'm looking because they did specifically call out markets, Illinois and Pennsylvania, as good growth markets for them. And Pennsylvania is about $1 billion run rate for 2021. And I was looking at how Pennsylvania did Q2. It was about $300 million in sales total pre-tax, and the Rhythm brand generated about $12 million of that. And I think it was the top brand, or maybe number 2 out in Pennsylvania. So that's good data to kind of back up what they're saying there about some of that growth. And they also entered Rhode Island and Virginia, newish markets, maybe not the biggest markets, but it puts them at 12 markets. Maybe that's 14 with those new markets, and 51 stores. Nothing to sneeze at. Their sequential comparable sales. Yep,
They
go
crushed.
ahead, Brady.
No, they crushed. I mean, if you where I like is 4 quarters in a row of positive net income, and they retired some expensive debt and replaced it at 7%. To your point, Emily, Ben is crushing the game. They're the clear leader for me in earnings. This release, they win. Ben's crushed it. I actually got to spend some time with him. We were out in Aspen, and he was out there at the same time for a little bit. And I like the Rhode Island acquisition personally. It's limited license state, open borders. I mean, it's a great state. And I've always been a fan, again, of a vertical market. So I love the Virginia acquisition. You're going to be able to get to scale. And if you get to scale, it's, again, you can control your own destiny. So I look at that positive net income number and compare it to everybody else on the list. He absolutely crushed it. You look at the EBITDA number. I mean, he's maintaining a healthy EBITDA margin. Big deal. But if you look at the trajectory, they are starting, in my opinion, they are the best balanced as far as what they're developing at retail, how they're bringing it to market, And one of the things I'll always give Ben credit for, from his conference call music to how he handles himself in the marketplace, he keeps it real, and he's got a level of authenticity that still kind of pays a little bit of homage to the cannabis culture. So something that really matters to me, that I'll give him always a kudos for that. But as far as being a steward of capital and growing responsibly, they're absolutely crushing it.
Yeah, one of the things he talked about with those new Northeast markets that are coming on, he said they're estimating there's 50 million new consumers in those markets that are opening over the next 2 years. I mean, this is going to be an incredible growth period. And I think the nuance that I'm loving the discussion about, you have growth from turning on new markets, but if we can also have growth in terms of depth of the consumer base and inviting new consumers into the space, like that's where we get a really lasting and kind of long tail of growth of this industry. And I'm psyched on that.
Yeah, I mean, their revenue numbers are up there. I think they're just, behind Curaleaf as far as, the groups we're covering today. And when you look at Curaleaf, they have 107 stores and GTI has 51 stores. Obviously, they're different models, different structures, different strategies, but they're doing a lot with what they have, and 51 stores across 12 markets, generating revenue in all 12 of those markets, and then this expansion to these new markets. I think pretty well positioned. I do really like their brand strategy too, and that Can Call Out, is really good. That's that number one selling beverage brand in California, kind of taking that to the 12 markets that they're in currently, and looking at other brands that they've acquired in the past, and kind of having a broader range, I think is pretty interesting, instead of kind of all their eggs in the Rhythm basket, or as we see with some of the other MSOs.
Yeah.
So yeah, excited.
And they launched, did you see that new brand they launched, Good Green, with the proceeds that are going to education and advocacy for people
it's awesome.
coming up? It's great. They're very mission driven, I have noticed too. Yeah.
Yeah, that's just important,
Culture is everything, and Ben's being a very good steward of culture. If you want to get, in my opinion, it's one of the things we focused on. If you want to have cannabis enthusiasts and purists that care about the plant, let's be real honest. The best growers and the best lab technicians were all, at some point in time, if they're really good growers or people that have hand to touch the plant, were in the black market before these legal markets started. Appealing to them, and running a good business, being a good steward of shareholder capital and the overall business, but also paying homage to that cannabis culture. Rhythm and those guys, what they've built and how they've built it and how they communicate and express themselves, I think really develops a culture within his organization that is, as they scale, is going to be critically important. You don't get quality cannabis unless you have people that are working in your farm and your garden and your lab that actually care and know what they're doing. So I give him credit for that. It's not something that's tangible. You can't put it on a balance sheet or a P&L, but it's very important in the market, and I give him credit. He's doing about as good of a job of the MSOs as that I've seen.
Yeah, absolutely. Let's move on to Trulieve. Trulieve, let's see their numbers. They put up some pretty sizable numbers on the board here. $215 million in the Q2 revenue, 11% sequential growth. So the lowest growth of the groups we're talking about today. I think one highlight from their metrics is the gross margin. I think, Emily, earlier you mentioned 60 plus percentage gross margin there. They certainly have a very different strategy than some of the other MSOs that we've talked about. In their notes on Q2, it talked about their announcement to acquire Harvest Health, and I think there seems to be the story for maybe later in the year. It's what they're really trying to talk about, is like this is going to make them the largest. But obviously that was just announced, not completed. I know that there's been some agreements that were completed recently, approved basically, but still a bit of ways off yet. They did commence operations, opened their first dispensary in Massachusetts, so they're getting out of Florida, kind of moving, but they are very concentrated in Florida. And Brady, I know you're close to Florida and you got a lot of insight here, but they opened their 85th dispensary location in Florida, and they've opened 91 stores. So they've got 6 stores outside of Florida, 85 in Florida. So it seems like they're pretty well weighted there. I know Harvest is going to change that dynamic when they bring that in, but when you look at the margins that they have and just being in Florida, is that what's driving some of that dynamic? What do you think about some of that strategy?
Well, I think they have a strategy. They are definitely I would call them kind of like the McDonald's of cannabis in Florida. They offer 1 million locations. It's incredibly convenient. They've got a really good build-out team. I mean, they can open a store faster than anybody probably in the space from an execution standpoint, which if you've ever opened a dispensary as an operator, it's not easy. So I give them a tremendous amount of credit for doing that, but they're kind of going the route of let's get as many stores open as we can instead of focusing on where those stores are located. Let's just get them open. A low cost product, but where they achieve their margin is they have over 1 million square feet of outdoor hoop houses. So it's not a CapEx or OpEx intensive cultivation facility. They've got a sizable indoor facility where they do put out some flower. But if you look at they're probably growing well under $1 on a fully loaded basis on a cost per gram. And they're probably flipping it, their average selling price is somewhere between $5 and $6 a gram. So look, it's a low cost business. It's a McDonald's / kind of Walmart, but they're executing at a high level. They're posting, very, very good numbers, 215 top line. And you look at that margin, they're not worried about margin right now. I think their challenge is going to be maintaining share. If I were to tell you that we were going to be agnostic as to what industry it was, what CPG sector it was, but I were to tell you, or any analyst, that if you open stores, as you open more stores and incur additional CapEx and OpEx, you're going to do that to lose market share. I don't think you would do it. And if you did, I think people look at you like you were nuts. So at some point in time, they have to address the share loss issue as other companies come and scale up in Florida and readdress that retail strategy. Again, Harvest is going to kind of help ameliorate that a little bit with bringing on those additional states once they close that deal. But in Florida right now, they are opening stores over the last 2 quarters to lose market share, which is not a winning proposition. And I fully anticipate they're going to address that in some way, shape, or form. But, from a top line level, they still have the most market share. The issue they have is quality of product long term too. They're going to have to make some substantial upgrades to what they're doing in Florida from a cultivation standpoint if they want to play in that premium space. They may not want to play there. They may want to be the value option that's available. That sector of the Florida market is very full right now. You've got Curaleaf competing for that low cost business. You have LHS, AYR competing for that low cost business. You have Cetera, Parallel, whatever they call themselves these days, competing for that low cost business. So you've got some big companies scaling up, spending real money in Florida to go fight for that market share. They've got some stuff to deal with through Q3 and Q4, but Kim's done a great job, even with all the noise she's dealing with personally too. She has done a tremendous job of keeping her head down and executing at a very high level and delivering results. So I give her, she and I have gone at each other in Florida. We don't always get along, but I will tip my hat to her for executing quarter over quarter. And also, it's not easy with the noise and the market pressure. She would rank second to me behind GTI. So I put GTI 1 just based on the net income. 4 quarters in a row in this space is ridiculous. And then I'd put Trulieve at 2. They, did a good job.
I completely agree. They're in beast mode. They're going for it. And I feel like she's, laid it out and she's executing. So the number one thing right now that we face in this industry is execution risk. Number one of 1 million, like I got 99 problems. And execution risk is just one of them. I don't know. But she's done a great job. And I think that she deserves the kudos for this. And there is a lot of execution, as we've talked about with the Harvest acquisition going forward. That's going to be a real testament to delivering on what you want to achieve there. But I think it's great. Yeah. So happy to see it. And I still want to do the Blonde Ambition tour with her.
I want to see it.
I think she'll be at karaoke.
Yep. Oh, yeah.
Awesome. So I guess we covered what? Curaleaf, Ascend, Green Thumb, Trulieve, Cresco. That's kind of Todd Harrison's Fang equivalent, right? From the big guys here. A couple more just to kind of close it out real quickly. So Columbia Care did 110 million, up 20% sequentially. Columbia Care, when I was looking at their gross margins are some of the on the smaller side, 43%. As far as what they talked about for Q2, the G-Leaf acquisition was completed. I think that gave them a bigger footprint in the Pennsylvania market. G-Leaf we see come up quite a bit in the headset data in Pennsylvania. So I think that'll, have a meaningful impact maybe in Q3. They also talked about their pending acquisition of Medicine Man, one of the longest standing Colorado dispensaries, pretty old school brand there. 4 dispensaries, 35,000 square feet of cultivation. That'll be, interesting to see how that plays out as they move into Colorado. It's, you see some Colorado expansion from some of these other MSOs, but it's pretty rare. Maybe it's going to start accelerating now. And then looks like they're going a little bit deeper in New Jersey and New York ahead of adult use sales, which is an interesting strategy. It's kind of like we all don't know what it's going to look like, and I think we're all waiting. And New York seems to, be extra up in the air now with the new governor coming in. So, maybe it's an early bet, but it's certainly a bet on, how that pans out. But, all in all, it seems like a pretty decent quarter for Columbia Care. Some decent growth, growing a little bit faster than, what we saw with Trulieve at their 11%. They also mentioned some of the consolidation of their retail network. They've got so many retailers under different banners, and I think they're trying to bring that all in under one banner. But I think they've only done 5 stores so far, so it seems to be going a bit slowly. But they talked about it as one of their highlights. Any commentary on that, Columbia Care?
Yeah, I mean, Columbia Care, like I said, I give them credit for going into the really competitive markets like Colorado and California, and also knowing that they're facing a bit of it's a very different market over there, with these mature markets. And like we were talking about, even just the basket sizes are different. Just everything is different. In California, you're competing with a super illicit market. So speaking to Brady's points earlier, so it's just very different, the markets they're navigating, and I give them credit for going after it. I do wonder if the investment in the rebranding of all the retail at this stage is totally necessary. I am a stickler on branding. I love cohesive branding, and I think we've got to get there. But I do wonder, when cost of capital is a little higher at this point in the industry, if it wouldn't, make a little sense to sit back on that and just kind of let the doors that you open do their work of selling. But that's just one thought. That's just a very minor point. I like their digital strategy. So I think, in general, they're executing. I know, when the Jeffries report came out, they gave them a pretty high rating for a re-rating when the laws change and we get more access to the capital markets. They gave them as a pretty big go-ahead. So I don't know, it's definitely one I like watching very closely, and I think the team is really smart. I think Nick's really smart, the CEO. So, and again, I love where their New York assets are located as well. So
I agree with you, Emily, almost wholeheartedly. The only thing I'd say is Nick needs to stop selling shares.
Yeah.
It's just, to me, we all have personal shit to go through, but when you're the CEO of a company, you got to lead by example. And, just for your employees, your investors, everyone see you dumping that much. I mean, they dumped a lot. He dumped a lot in the open market. I know it got picked up all over Twitter, but that's not if you're going to do it, you need to create some narrative around why you're doing it and just be honest. But in the absence of that, it doesn't look good. But other than that, I mean, their New York assets are probably some of the most well-positioned. And, they've got a business there that if they hit the gas pedal a little bit, I think is what I would say. You said it very eloquently that the stores were going a little bit slower. I would say put your foot on the accelerator like a Trulieve does, channel a little inner Kim Rivers and get your stores open.
Get your stores open. I mean, I guess when I see his selling compared to like Brandon Kennedy's, it seems pretty mellow,
Well,
but I mean,
that's quite the comparison. That's quite the comparison. If you say it like that, then it was nothing. It was a drop in the bucket.
Yeah. Like Brendan sold more in stock, I think, in 1 year than they did in revenue that same year. So,
what about old Cam Battley at Aurora?
Yeah. We watch these things. I think it's an important point that you're making, Brady, because these are indications of, I mean, like you said, a little more narrative around it always helps. Like, if there's a lot of reasons that
I got to pay taxes. Yeah. I got something going on. It's personal. Sorry. I believe in the company. Yeah. But as a CEO, I mean, we were going through hell when we were building out Bluma, and it's like, okay, great. I got a bunch of stock. And when it was at 22 cents, I had a bunch of steaming pile of garbage. But if you believe in your business and your scale up, then if you're selling, it just sends, it's a psychological message that you're sending that maybe is not intended, but you've got to have some narrative around it as a CEO, in my opinion. Just that would be my only knock on them, was that kind of just unexplained selling.
Yeah. As Morgan says, eat your own cooking.
Yes.
Yeah, no, good call out there, Brady. So last but not least, Verano. It's funny. I was reading Todd Harrison's update just this morning, as Todd Harrison of CB1, and he was talking about Verano as maybe another letter in FANG, maybe another A in our FANG analogy of Facebook, Apple, Amazon, Netflix, Google here. Verano of the Move retail brands, ZenLeaf brands, G-Line, Encore Edibles, they posted some pretty good sequential growth. I think the highest percentage, 39% on some good Q2 revenue of $199 million. So good growth percentage, pretty good, top line revenue number there as well. In some of their highlights, they call out organic expansion, bringing 7 new dispensaries online in their core markets, what they consider their core markets: Florida, Illinois, New Jersey, and Pennsylvania. Solid markets there. And then they added 9 fully operational high-volume dispensaries to their portfolio through acquisitions, particularly in Arizona and also Pennsylvania. They're at 83 operating dispensaries. There'll be 90 at the end of the year. So Verano, making a name, maybe entering the upper echelons of Todd's FANG groups. But what do you guys think about some of these moves that they're making?
I'm a big fan of Verano, personally. Always have been. I got to know George. We were actually going to merge with them. Little known fact, in 2018, when we first got a hold of Three Boys Farms, we were going to merge with them, and then they went and picked Harvest. And then that deal didn't go through. But we got a deep dive into their operations. George and his team, George and Sammy, both are pure operators. They run a very good business. They run a very tight business. I know they're having a little bit of cap table issues right now and some selling and some pressure from our favorite shorts up in Toronto. Bay Street's having a little bit of fun with them. But from a fundamental standpoint, that business is on very solid ground. Those guys know how to operate. That team knows how to operate. They know how to cultivate at scale. And I think they belong, as you see them grow and expand and you see some of the scale up start to come to fruition, they're going to belong with a position in that top 4 right now between GTI, Trulieve, Cresco, and Curaleaf. Verano, to me, is the next logical number 5.
Yeah, another bigly one. They've got some killer assets too. Yeah, so today the stock, it's interesting, it's Friday and the stock is definitely taking a bath today, and I think it's because there was 8.4 million shares unlocked and I think that was a $15. Was it Canadian or US, the selling?
I believe Canadian. I think US was down in the 13s.
13s, yeah. So that's a pretty big chunk of stock that's moving, and this market doesn't have a lot of liquidity to bear that. So
it's at 1270 right now, 1270 US right now.
Yeah, so those like big movements, the market can't absorb it as efficiently as if it was, listed on the exchanges. When you look at the disparity of the volume in there, so it tends to hurt it. And I think there's probably some to your point, Brady, there's probably some hedge fund activity there that's also creating downward pressure.
Well, I think that'll do it for the earnings here. Pretty good. It's great to, get all these in at the same time here. We'll track how this goes next quarter. Just kind of looking at, the growth rates in the markets that we cover at Headsets. Everything was up Q1 over Q2, and even large markets like California up, 8%. So a lot of these organizations are beating the growth rates built into the markets. There are some like Michigan that grew 26%, going from 360 million in Q1 to 450 million in Q2. But those are, more of an exception. Sub 10% growth rates is what we're seeing, but the industry is, quarter over quarter. So, most of these, if not all of these, outperformed just kind of what we're seeing in the industry. And I know some of that is just, in their like store sales. Some of that is in expansion and acquisitions, but just good trends all around. And let's hope that at some point the share prices start to reflect some of that.
Yeah. Well, in the meantime, we'll just invest as if no one's watching.
Burn the ships. Burn the ships.
Or as Anthony said, we're going to need a bigger boat.
Question for you, Sai, because you mentioned it, and it's a market that I've studied that I don't know what to make of it. But you mentioned an interesting data point there. Michigan is kind of an outlier on a growth rate as opposed to some of the others. What was that Michigan growth rate, and what do you think really kind of drove that? What unlocked that to outperform?
It's a good question. The growth rate of 26%, Q2 revenues of 451 million, that almost is Colorado size at that point. Colorado did 475 million. I think access is one of them. It's just more shops seems to be a big driver when you see lift like that, just more access to cannabis. But I'm not exactly sure. I haven't dug in too much. We actually just launched a deep market read of Michigan this week here at Headset, so I haven't had a chance to kind of dive in. But we do have some industry reports on that, and I'll see if it touches on some of those trends. But that's some good growth rates, and it's getting there for sure, and definitely an outlier in the markets we track.
Yeah, I mean, I've spent time in the Michigan market. It's largely kind of C-store stuff. it feels like. And there wasn't a lot of cultivation online, but that's a big growth rate. That's a big jump over a lot of these other more mature states. So you mentioned it. I thought it was worth the 30 seconds because it's one to definitely I think people should track. I think you're going to see some MSOs. There's not a lot of MSO presence in Michigan. There's some limited stuff, but as that market kind of develops more fully, it's one that I'm watching.
Yeah, absolutely. I think Ascend, called out some Michigan stuff that they're doing, but yeah, it definitely is less prevalent with the groups that we're talking about today. To close out here, from a news perspective, I think, one notable item this week that came up is Scott's Miracle Grow or Hawthorne Collective, which is a subsidiary of Scott's Miracle Grow Company. It did $150 million strategic investment in Riv Capital, formerly Canopy Rivers. Full disclosure, Canopy Rivers or Riv Capital is an investor in Headset, but Riv Capital has stated a strategy of looking to acquire, invest, launch, and develop some U.S. assets to build a multi-state cannabis operating brand platform, which would seem to indicate that they may be another MSO coming at some point. And interesting to see Hawthorne making a pretty big bet here on Riv Capital. Any thoughts on that big headline this week?
Emily, go for it.
I mean, I think it's another way that we're seeing bullish sentiment from these big companies trying to get into the markets. And I think this was their way to kind of backflip into the US, as I kind of been calling it, with like what we saw with Constellation and some of these other big corporations really wanting to get access to this market. And so it's a smart move. Obviously, no Narve Alexandrian from Riv, another respected colleague in the space. And I think Brady has more interaction with the Scotts team, but I think it's a smart move. And I like to see these things because as we've been talking about, people are becoming impatient and these corporations are becoming impatient. They're not ready to sit on the sidelines anymore. They want to participate in the growth of this industry. So it's a good sign.
Yeah, I think it's a great sign. I'll give Jim Hagedorn at Scott's a lot of credit. He was one of the early people in Washington when I first started going up there on cannabis. I'd been going up there and lobbying there for a number of years, but when I first went with cannabis, we actually shared the same lobby group, the BGR group, which is led by Haley Barber. And they were one of the early, like 2015 groups that were up there with us, pounding the doors and going door to door and trying to work through cannabis legislation and reform and start, primarily talking and starting to sensitize the issue with Republicans. So to now see them jump in, I mean, they already own a huge segment of the ancillary business, the non-plant touching business. You go to that MJ BizCon and you see everybody selling all the exhibitor booths selling soil and fertilizer. The reality of it is Scotts owns about, the biggest share of that market. But to see them jump in meaningfully again, it's just another, it's like Jeff Bezos announcing that they were in favor of cannabis and Amazon was in favor of cannabis. Again, it further solidifies it's not if, it's a when moment. When this is all going to flip, and every one of those bricks that piles on our side of the seesaw is a good one. So savvy operators that already know the space enter it in a meaningful way is a good sign. It's another good omen as we all are sitting here getting punched in the gut every day.
Yeah, that's a good way to put it. Yeah, that's fantastic. And now, Riv Capital is 400 million Canadian or so to put to work. So it'll be really interesting to see how this all pans out. But yeah, it's such a great headline for the industry and a vote of confidence coming from Hawthorne Collective, subsidiary of Scott's there. Well, I think it's a great place to stop. Next week, we will have some SSO earnings, or super state operators, as Graham Farrar at Glasshouse has called them. So we'll hear from Glasshouse next week. We'll hear from the parent company. So it'll be interesting to see, these are the California-centric SSOs and see how they're performing over the quarter. So it'll be interesting to kind of cover that. And, of course, all the news that will come out between now and then. Brady, I can't thank you enough for joining. It was so great to have your insights, just given your experience in the industry, with Bluma, with One Plant, as an entrepreneur, as an advocate. Really, really great stuff. Love to have you again if you'd be open to it.
I'd love to do it. This was awesome. It was always good to see both of you, and I enjoyed the discussion. It's nice to actually be able to talk out loud to other people that are going and being a part of this space and seeing it grow. So I really appreciate it. And if anything, we can all commiserate on the pain points. But I think we're set up for a really exciting back half of the year. So anytime, I'd love to come on.
Fantastic. Well, we'll definitely have to do this again soon. Maybe when we hit the next quarter earnings and we can kind of track some of our thoughts and our predictions and our commentary and see how it all came together. Well, I think that'll do it. Thanks, everybody, for joining. We'll see you next week with more laid-back, data-backed conversations on all things cannabis.
Awesome.
Till next time.
Thanks for listening to the High Rise Podcast, presented by Headset. For more information on Headset, visit headset.io.